So we're going to talk about break-even analysis. So this is how much income you need to not post a loss. So what you're looking at is where revenue equals expenses. Revenue is how much money you're taking in, expenses is how much money you're spending. So expenses are broken into two separate areas. You've got your fixed cost and your variable costs. Your fixed costs remain the same regardless of what's happening. This is things like your rent, your electricity, your wages, and things such as this. The things that it doesn't matter if you're selling, it's just the cost of doing business. Your variable costs change depending on how much you sell. So for example, if you're making a burger, that's a cheeseburger, you need to pay for the buns, you need to pay for the cheese, you need to pay for the burger. These are the things that will change. So if you sell one burger or you sell 10, if you sell 10 of them, your variable costs are going to increase by 10 times what one of them is. So your variable cost is the number of items sold times of the cost per item. Your total expenses are just your variable cost plus your fixed costs. These are pretty simple. So let's have a look at it. There's two ways we do this. Sally's Burger Bar sells burgers for $6.50. It has a $200 of a week in fixed costs, and each burger costs $1.50 to make. How many burgers must Sally sell to break even? We're going to firstly use the marginal income way, and then secondly we're going to do it graphically, using a graphics calculator that you should have. You can also do it on various programs on the internet or within Word. So marginal income equals sell price, take cost price. So she's going to sell the burger for $6.50 and it costs $1.50 to make. So at $6.50, take $1.50. So every burger she is making a gross profit of $5. Not a net profit, a gross profit. The break even is just your fixed costs divided by your marginal income. So $200 divided 5 is 40 burgers. So what Sally has to do is sell 40 burgers to make sure that she's not losing money on her burger bar, and every burger over the top of that, she is making money. Your variable costs, when you're doing it graphically, what you need to do is you need to go through and use a graph. You're going to put it on the Cartesian plane, and you're going to go through and find out where they intersect. The line between total expenses and the line between total revenue. So your variable costs are $1.50, X. X is because we don't know how many burgers we're going to make. So we call it X because it's unknown yet. So that's what we're trying to find out. Your total expenses are just $1.50 X for the number of burgers, plus the $200 for the fixed costs. Your total revenue is $6.50 X because once again you don't know how many burgers you're making. Now we're going to use the graphics calculator to find the intersection.